Hello guys, welcome to the Trading Parrot. From yesterday, I said that the 4-hour is so full of noise that we need to step up into the daily time frame to start finding hints of what's going on. And guess what? On the daily, we are starting to form some bottoming formations. In this video, we're going to talk about the levels that need to break on the daily to confirm that those bottoming formations are going to succeed. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this particular video? It will be fantastic. In less than an hour, I'm going to be live in the Elite Private TA session. You can join it if you are a YouTube member. Now you can also join it separately directly from Patreon. The same stream. You still have time to be part of the poll and request the coins that you want me to review and live answers and questions throughout 1 hour of stream once a week, every Thursday at midday UK time. If you want to join, you need to become an elite member. The link is in the description. Don't forget that you can still claim your $3,000 of bonus. No matter how much you deposit, you always get a bonus as long as you use the link in the description to sign up to this non-KYC exchange called Bluffing. Let's go straight into the most relevant news that we are having for today, 23rd of October. We have Bitcoin's OBV Granddaddy volumes indicator hits the lowest level since April, signals weakness below 100k. This is the Bitcoin's on balance volume indicator, a cumulative volume measure and leading technical signal that has dropped to its lowest level since April 24, when Bitcoin was trading at 94k. And this is despite the price getting into 108 and beyond. I wouldn't give that much weight to this particular article, even if it's a too very bearish, because there's tons of technical analysts calling for very extreme things, and this is just a single indicator, so it doesn't match the full analysis that I will be expecting from a proper technical analyst. We have a 6 out of 10 moderately bullish. Bitcoin trades flat at 109 as markets await Friday's CPI data, last macro signals before the Fed meeting. So that uncertainty is keeping the price just faking out on the 4-hour, catching more and more scalpers on the wrong side. We've been for 3 times in a row seeing that the price goes around the CME gap 1 time, 2 times, and eventually it fully closed. The first time was this one, that it actually closed more than 3/4 of the full gap, and then there was just that quarter there left over that we ended up closing in here. Then we went up and we came back down to the same place, forming some sort of double bottom in here on the 4-hour. Now, this move in here, I have to say, it feels a little bit more shy than the ones before, because the ones before we reached 112, then we reached 114, and I would have expected this one, if it had enough energy to do it again, to get into that 118 that we identified in the order book yesterday on Market Monkey Terminal. That level of 118 is still there, and now we have some resistance waiting at 114, and below it a big cushion of support spreading from 104 all the way to 92, 93. So maybe someone is expecting to fish in here, and that could be a bullish signal, because when too many people are wanting to fish with the same net, eventually someone notices that there is demand and they start front running. If they did some front running, they're gonna face a humble resistance at 110, around 1k, but constantly fluctuating. Then we have 114 and 118. The largest one at the moment is 114, which coincides with where we have the previous high on the 4-hour. That is around this high. So since there are big expectations of a rate cut, that is why we are tending to front run and why there is that caution there. As a third biggest news, we have a 4, which is bearish. Again, Google's Willow quantum chip achieves a breakthrough, reignites the Bitcoin security debate. And this is, something that eventually we're gonna see quantum computing really becoming fast enough to represent a risk to the network. Remember that there is a potential solution, but you need to change to a wallet that supports that. And kind of the risk is that the amount of people that are not going to migrate, because as a user to stay protected, yeah, you can do it. You can have your old wallet, you transfer to the new one and you're done. But that is not the risk. It's not the risk for your own holding. It's the risk of the holders that are dead, lost wallets, Satoshi's wallet, and all those ones that are not necessarily going to do the migration. And if they don't do the migration, they are at high risk of being attacked by a new generation of quantum computers. And the time span for Google to achieve what is required to break this sort of security, apparently they're expecting it to be within 5 years. Dan Crypto is saying that BTC is still stuck within the 107 to 111 range. As you can see, the volume traded in this region is pretty thin, which is why you're seeing these big moves in between the levels. So yeah, that explains these big spikes thanks to the low volume. It's good that the 107 level it's holding so far, but my worry about the 107 and the reason why I didn't say let's go for a third long. I did this long and it moved from 107 into 111. Then again from the same level we enter slightly lower and it moved into 114. But the third time I told my Patreon community that I have my doubts whether 107 is going to hold. I am at the risk of missing out, and I agree, and I should have maybe be more brave in here because I'm already holding a short which completely hedges the risk of being wrong on this third time, but I still decided I'm not gonna go for the long, also because my community are not all of them in the short. Many of them already closed the short, so there's so many caveats for people copying that they do not consider. That's why blindly following without the context of what I'm currently doing on my end is never advisable. You should never copy me. You should just know what I'm doing, challenging 10 times against your own situation, your own risk aversion, your own preferences, targets, goal, etc. And then decide, because it's going to be your responsibility anyways. BTC is moving inside a compression triangle. We know that. And the 4-hour momentum with every single move up and down is faking out, expanding that compression and showing us signs that it really wants to break out from the squeeze. Polaris XBT is saying that the logarithmic MACD has been one of the most reliable cycle indicators in Bitcoin history. Let's see why he's saying that. You can see in here the bands of the MACD produce a bear cross pretty much around the time, maybe 2 months after the actual peak or 2 weeks after, and we already have a bear cross. The caveat is that we haven't hit the top. That is something that is happening to all the momentum indicators, that we don't hit that line. So we are kind of given the signs, the signals of the end of the cycle without having achieved the usual milestones that we should be expecting in terms of momentum according to the trend. Glassnode is saying that the short-term holder NUPL highlights growing stress among recent buyers, and we can tell that the people that are currently trading with this low volume are scalpers, and you can tell that by their modus operandi, that every time they stretch it a little bit more. Those 4-hour fakeouts are really confirming those facts. And what that tells us is that an incremental range is expanding with liquidity on both ends. That is the perfect recipe for the squeeze. You could get a squeeze on CPI news that hits both sides that are immediately next to the price. We could see a low because lows have not been hit at all, and that is an alpha that could play out and might not play out. But let's say we do something like this and we take that low of 102 or 101. That will be a magnificent opportunity. Of course, we can go into 118 and then crash as well, because we haven't taken any of this, we haven't taken any of all of this, and now it's been since 19th of October, 4 days that we don't take the 107. I will love a liquidity hunt in here. There's so many things that could play out. Really, we need to contrast ideas with the rest of the video and see which one could be the most appropriate. I felt like going for a third time for the same thing doesn't really go with my standards. Of course, you can feel free to do whatever you want. It's your responsibility if you miss out. It's mine if I miss out. And again, I produce the full report of all the videos I captured in the past 24 hours, multiple channels, around 30 channels. They published 42 videos and they got combined 500,000 views. Sometimes we get almost a million, and the hottest topics covers across all crypto channels in YouTube. According to my AI beauty that I built is a beast. The Federal Reserve crypto integration and policy, we got 147,000 views on 4 videos. Solana technical analysis captured a lot of views, and we did a video yesterday about Solana because there's been the ETF in Hong Kong release. You can watch my video. It's actually this one in here. We got the institutional Bitcoin ETF accumulation. We need to look if that is actually the case. Global liquidity macro conditions, Bitcoin cycle top, mid-cycle debate. I was part of that as well. Yesterday I published the ratio charts for Bitcoin, which thanks so much. We got so good feedback on the cycle ending now video, which is really putting things in perspective. It is not a forecast video, okay? It is a video analyzing and giving my honest opinion on how the charts are looking from that end. Whatever you decide doing with that information, which was unbiased, honest, and very technically skilled report for you guys. You decide what you do with that. It's your responsibility. Quinten is saying, could this be the most disappointing cycle in history? So far we got 18% of this period in time in the cycle. In this one there was 260, 2,300 and 9,000, and you can tell that it compresses the volatility at a very fast speed. I mean, from 9,000% to 18% within the same period, which is supposed to be the bubble period. That is very underwhelming. Over the last 2 years, Bitcoin has tended to rebound when traders' loss margin drops below minus 12%. It's currently a minus 5, and we got a wedge pattern forming, and we are at the bottom of the wedge. Of course, the wedge can fail if it breaks below 106. That is a big level that we need to contain. It's been bought up multiple times. We need to look into the weekly time frame to get some additional context in here of what's going really on and why 110 we are not being allowed yet to put a close on the 4-hour or daily above 110. No. We have big resistance there, and we need to flip it into support, and we can do that going beyond certain price that I will give you later. So if you are already in a long, which I'm not, and we conquer that level, there could be very fast out of the squeeze explosion to the upside, and I might miss the train. So wait until I give you that number. Historically, Ali is saying when Bitcoin BTC breaks below the short-term holder realized price, it tends to fall under the long-term holder realized price too, which now is at 37,000, sorry. Ali is wrong. This cycle we go below the short-term holder realized price more than 4 times, and we spend even months below it, and we haven't gone a single time to the long-term holder realized price, which is the orange one. The short-term holder is the red one. So do not spread fear unless you give some context, Ali. If you mean that this is specifically the typical thing that happens at a topping year, that might sound a little bit better, but so open like that, it sounds just like spreading FUD or poor quality TA. Atlas is saying, I've never seen a market this dead in 5 years. 2025 was the year of pure market maker manipulations, and I totally agree. And insider trading, don't forget about that, Atlas. Trump tariffs, BTC reserve, 19 billion liquidation and more. And yet, retail is exhausted. Let's have a look at what my community is asking. As you can see, I already shared the intelligence dashboard with all the videos, so you can understand what all these 42 videos are saying in an aggregated way by topics or per video. It's a magnificent beauty built with my AI. And I also need to share the Bitcoin status. My Patreon community cannot complain. They're really spoiled. Let's have a look at the questions today. Is there anything in the data which is supporting why we are whipsawing so heavily still? And I think the CPI report escape is coming in. It's been held for a while, so some insiders probably are trading this already. And since it's coming tomorrow, the only thing that they are able to do at the moment is the scalpers and the speculators to just expand scan the 4-hour with fake outs, produce calls for we're gonna front run, we're gonna go to 120, but no, they just push the thing to produce a breakout and then they dump it. So that is just what's currently going on, and that's the main reason I've been also rallying everything with break-even stop loss. If you've been in the channel for a while, you know that most of the time I don't use the stop loss, but this particular period we've been using it, and thanks goodness that was the case. Lara saying, I'm too tired, boss. I guess we'll scalp for now. I think we need to hold on the horses and wait a little bit until CPI, or as we approach that, pay attention to the insiders. If we can spot some group of insiders shorting or longing, we know that there's plenty of shorts already in the market at a loss and adding to their shorts. So potentially there is a chance that they know something. You can see that Cerberus is printing this and people are already being able to follow up looking at my charts that are all available for free in my Telegram channel. Looking at the aggregated open interest once more, you can see that the aggregated open interest broke out and went to a new range. New range in here, came back down, but just to test the previous range, which is something bullish, right? Coming back, the aggregated open interest to 22 billion and meeting up with 21. That's bullish. That's a great buying opportunity. This one in here pushes into 37 and pinches halfway through to the point of control of this one. That was already deteriorated performance, we can say, and then it pushed into a new range in here with highs and liquidating shorts as much as possible, and then it came back to this one. So this range in here is overlapping fully with that one, and in my opinion this is the first time that the aggregated open interest is back to the previous range and stays there for quite long, I have to say, because this one pinch, it didn't fully come into 28, it just went to the point of control, which is already a bit too far, but this is too far, and if we go to 28, that is already kind of disaster. So I would really like to see this 32 to come back into 39 and to confirm that yes, speculators have strong conviction and they're betting big that something is coming back. Remember, aggregated open interest, I use it as a leading indicator. So if it's going to behave as a leading indicator of a breakout into a new all-time high, come on, hurry up, aggregated open interest, start picking up with positions showing me what you're capable of and act as a leading indicator. Break out before the price. Is it doing that? Not yet. And that is a bearish alpha, I have to say. Something really needs to change my mind from that end. October still in the red. Even I wasn't expecting at this point on the 23rd, just 1 week before finishing October, to end up in a red October. We still have that week to change things, but historically speaking, around the first week or the second week of October, we will have already gone into the green. So we are kind of late a tiny bit for that. Still some hope, sure, fair enough. Let's go into the Bitcoin status. I think I haven't changed this, so I'm gonna just go into the chart before I run out of time to go into the live stream. I have to move this a lot. This was like this. I have to move it here. I have this earlier like that. I have to expand it. So now you can see 63.46 is the squash at the moment. Support coming in at around 108. That's pretty good. We have a support at 108. We need to hold that. We are seeing some distribution already going on in here. There was also here, but it carried on. But we have to acknowledge that some people in the middle of the fair value gap are trying to close their position. We have coming in 112. We have coming in 113 and 14 that are resistance. And we are below the anchor VWAP on the 4-hour that has held. We should not turn it into resistance. On the daily, things look a little bit more promising. Why? Because we have kind of half a double bottom form. We need to do something like this and get into this 110, 111 more or less, and form this to get a breakout into 117. That was the original target that I wanted to hit. And we have this higher low coming in here. We need this guy to complete what I was saying yesterday that we should be doing, which is to go into around 50 RSI. By doing that, we can get into around 112.5. We need candle daily closes around there. By doing so, we can produce the MACD bullish cross below the zero line, which is something pretty good. We had one in here in September and we started rallying. It was up and down, but we managed to put a new all-time high. So looking forward to complete that. If we get get rejection, that 111 can also be a rejection. If we cannot manage to claim that, or if we do a liquidity hunt in here and then we dump from there, well, that is gonna look like the typical dead cat bounce, at which point we will have to say that the daily also started a period of fake outs. We can see that 110.5 as a line in here, it looks very clear to me what is the next resistance, despite the fact that next we have also the pivots of October, which have already won the battle once. The head and shoulder is having a tough time to reclaim 114. Another reason to understand why 114 is so heavy. It is a green candle. So far, it's been red as well, and it's got a lot of work to do. It needs to go beyond 115 and close here with the body above, not just a wick. Because even worse, if this wicks into 115 before closing the week and it gets rejected back here before Sunday, that is even uglier as a rejection because it traps a lot of longs in here, and then next week it collapses, crushing all of them at once. So watch out with your risk management, because there is a potential that they want to go for that plan, particularly considering that we have a bear cross on the stochastic RSI to continue to play out, to continue to point down, a bear cross on the MACD, again weekly, and we are confronting the bull market support band. We're being squashed between this and this. So if this fails, there is the chance that we actually touch the 50 weekly MA, or that we lose it and we go into 96. So that's what I mean, but the amount of risk that we are currently having. Now, let's have a bit of bullishness as well. There's been tons of panic sellers in here, so that's bullish. We have a buy signal in there. On the monthly, we're still holding that 102.7. That is big support on the monthly, and we are on the lower end in here of the top bottom weekly. So it's meaning that we're getting very close to a multi-year level of support as well. On this move up, there were not too many longs, and that shows you how they are being more cautious against the CPI. This and this, sure, they were going all in, they took profits, they let the price come back into the range, but with this one, which I wasn't part of, we didn't get into the 118. So far now, I haven't missed out, but if we go into the CPI and some insider starts trading this big long, we might miss the move up. We miss tons of trades, but the ones we take are all 100% in profit in over a year. Yes, win rate 100%, which I care a lot more than you thinking or anyone thinking that I miss a trade, because that is noise. That cannot be part of my own analysis or the way I rate myself. There's been some distribution on spot ETF. People were calling for this very bullish, but it seems that was just an oasis in the middle of red. We are in fear, out of extreme fear. Yesterday was extreme fear. We've been hitting our cheeks so often to look for a long. That is kind of hurting, and maybe today I'm gonna deserve double slap in the face with 2 espresso shots of coffee. If I miss the long, you tell me if you think I'm gonna miss it, or you tell me if you think that was the best call, because we are about to dump into the liquidity of 97. Okay, in the short term we can see that that's the heaviest close proximity. We can go even to 122, and there is nothing as big as 97 short-term close proximity. Getting even closer, you can see that 115 is big. That is thanks to all the shorts that enter there. The longs have their risk at the moment at 103 in very close proximity. So those are the 2 hits that we have in the past week, 103.5 and 114. And right there you have the shorts, right here you have the longs. So we need to pick our poison. Which one is going to get hit first in the close proximity? We go for 115. Think about a market maker. Today you're a market maker. Write down a comment down below and tell me, close proximity, short term, 115 first, or you get more greedy as a market maker and you think you can make it further away from price and we can hit fully 100 with a move of 8.8k. Or you're going to have to go way further away into 130 to really produce massive liquidation of shorts. At that point, this looks like peanuts. On the long term, that is pretty clear. This summarizes all the pools in a very big way, high level perspective. When we go into the 3 months, of course, 90 to 96k remains there. Big levels of liquidity. Tops are 116, 123, but now we have something in here for forming around 105. I might be interested to enter on a long on that level. If you're part of my community, whether you are on YouTube, no, actually you need to be on Patreon. On YouTube, you don't get articles. So if you are on Patreon, you're going to get notified straight into your email if I decide to do that. But look at this. The purple whales today are very shy. After the sharp drop from 114, they haven't been part of this. Neither I. So, consider me part of the purple whales attitude. We have support at 100K, resistance at 130, and multiple layers of sell at 114.7, 120 with 34 million, 36 million at 125. And the order book continues to progress. Nothing changing that much. 104, I forgot to say, and 102 has some support. Still, panic sellers are dominating on the CVD. Longs took a nose back to the median of 15,000. Shorts got hit when we move into 114. They're back to 2K from 8K, and that has reduced the open interest. So with this whipsaw that we saw yesterday, there's been a reset there. And in terms of longs, shorts, this is very important as well. Every time that we get into that level of around 70, you can see that they enter and they take a long that goes up. It doesn't necessarily guarantee a lot of upside, but it went up. But I didn't take this one. I didn't take this, neither that. I took the ones that were close to 70 at 68, 69, and those two went up. And we are in extreme fear in here. We already took that liquidity. So now the question is it really going to go to 116 now? That's a big one again. Or it went just to 109, 110, and it's done with that. Longs took a nose, but not that low to say it's the end necessarily yet. The order book is extremely flat up until 5% deviation. There's orders that we can see in here, 5% up, 5% down. If you squash all these numbers and aggregate them, it's giving a ratio that is very flat. From 5 to 10, you have additional support coming in. Below 10 to infinite down, you have kind of negative. And the delta is very flat at just 70K. The open interest buckets, that 114, 115 is still there, is still the largest and is on the upside. That's an alpha for upside. Fair value gaps, we have this one in here, then we have the 114 and 120, and below we have to go to 97. I won't be able to do a summary. I will give you the summary in the live stream for elite members, and later after I do that, after I have lunch, maybe I'm gonna publish a proper summary for you because you're supposed to get once a day one. But I am looking for longs basically, and I want a slightly better opportunity. I'm being picky in here against that risk, maybe too picky, but hey, it's my trading, it's public, but at the end of the day, it's my decision to make. Thanks so much for watching. I'll see you in the next one. Hit the like, write down a comment if you want this sort of content to continue in this way indefinitely. Bye bye.